Additional Medicare tax is a simple idea with a tricky twist. It's a 0.9% extra Medicare tax, but only on earned income above a threshold. Think wages, tips, bonuses, taxable fringe benefits, commissions, and self-employment income, not interest, dividends, or rental income. On the EA exam, they love testing whether you can separate earned income from everything else. Now lock in the thresholds by filing status. Single, head of household, and qualifying surviving spouse use $200,000. Married filing jointly uses $250,000. Married filing separately is the painful one, $125,000. The tax base is only the amount over your threshold, not your entire wages. Memorize these numbers. This is pure exam bait. For married filing jointly, you combine both spouses' earned income to see if you cross $250,000. That means one spouse can be under $200,000, but the couple still owes the tax if the total is over $250,000. And the opposite can happen too. One spouse has withholding taken out, but the joint total ends up under $250,000, so they get it back as a credit on the return. Here's the twist. Employer withholding doesn't follow your filing status. An employer must start withholding the 0.9% additional Medicare tax once they pay you more than $200,000 in Medicare wages for the year. Period. Even if you're married filing jointly and your household won't exceed $250,000. Even if you have two jobs and neither job knows about the other. Also, there's no employer match for this tax. It's entirely on the employee or the self-employed taxpayer. And if you're self-employed, you do not get to deduct half of the 0.9% the way you can with the regular self-employment tax. On Form 8959, you compute what you actually owe, then reconcile it against what was withheld. Computation is always the same. Add up earned income subject to Medicare, subtract the filing status threshold, and multiply the excess by 0.9%. Then compare to withholding. If withholding is too low, you pay the difference. If withholding is too high, common for MFJ where one spouse earns over $200,000, you claim the overpayment on the return. Form 8959 is the mechanism. Ethan is married but files married filing separate. He earns $120,000 in wages and another $80,000 in self-employment income with no other income. How much additional Medicare tax will he be required to pay for 2023? The options range from 0 to a few thousand. Think about it. The answer is $675. For married filing separate, the threshold is $125,000. Ethan's earned income is $200,000 total, so he's $75,000 over the threshold. Multiply $75,000 by 0.9% and you get $675. A tempting wrong move is using the single $200,000 threshold and getting 0. Filing status controls the threshold. Omar is married filing separate. In 2023, he has $185,000 of self-employment income. He also has $15,000 of taxable rental income from a property he owns, and he is not a real estate professional. How much additional Medicare tax does he owe, given the MFS threshold is $125,000? Think about it. The answer is $540. Additional Medicare tax applies only to earned income, so the rental income is ignored here. Take Omar's self-employment income of $185,000, subtract the $125,000 MFS threshold, and you get $60,000 subject to the tax. Multiply $60,000 by 0.9% for $540. The tempting trap is adding the rental income.